This is the second part of the discussion of this 2024 A-Level Economics MCQ paper. Look at this question 26. Suppose a businessman withdraws rupees 50,000 from his safe and deposits the money in a commercial bank. All right. If the bank holds no excess reserves and the statutory reserve requirement is 10%, how will this deposit increase bank's required reserves and the bank's lending ability? So simply, this is a deposit of rupees 50,000 in a commercial bank. So let me write here, the bank receives a deposit of rupees 50,000. And once the bank receives this deposit, they need to divide this into two parts. So what are the two parts? The statutory reserve, and this statutory reserve should be kept in the bank or maybe as a deposit in the central bank. But the other part of this 50,000, which is the excess reserve, bank can use to offer loans. So how much is the statutory reserve that is relevant to this rupees 50,000? 10% on 50,000. So if you calculate 10% on 50,000, you get the statutory reserve. So 5,000, which means the required reserve that the bank should maintain from this 50,000 is simply 5,000. And as I mentioned earlier, they can use the excess reserve to offer loans. So how much is that excess reserve? That is just 50,000 into the remaining 90%. So the remaining 90% of this 50,000 is simply 45,000. So required reserve is 5,000 and the lending ability of the bank increases by the amount of the excess reserve, and that's 45,000. So answer for this question 26 is the fourth one. Look at this 27th one now. Which of the following statements best distinguishes between demand pull and cost push inflation? This is very simple. All you need to do is to draw the diagrams and see what happens in a demand pull inflation and cost push inflation. Now, for example, if I draw the first diagram for demand pull inflation, so what happens? Let's assume that this is where the equilibrium is, right? The economy is operating at the full employment level of national income. So this is the current aggregate demand and this is the current aggregate supply. And if the aggregate demand increases beyond the level needed to maintain the full employment level of the economy, right, it will create an inflation. See, only the price level, this is the price level axis and this is the real output axis. Only the price level increases from P1 to P2 and nothing happens to the level of output. So this we recognize as demand pull inflation. And then what happens in the cost push inflation? See, look at this new diagram. Again, let's say that we have the aggregate supply in this way and the aggregate demand in this way. Due to the increase in production cost, aggregate supply curve gets shifted to the left side. When the cost increases, the supply reduces, and as a result, aggregate supply curve gets shifted to the left side. And as a result, what happens again? See what happens. Initial price level is P1 and the new price level is P2. So as a result of shifting this aggregate supply curve to the left side, price level has increased. So this increase in price level we again recognize as an inflation. But the difference between the two is this is demand pull inflation and this is cost push inflation. So that's the difference. Right. Now we'll read one by one. Demand pull inflation is caused by excessive supply. No, demand pull inflation is caused by excessive demand. So that's wrong. Demand pull inflation occurs when aggregate supply, see, demand pull inflation has nothing to do with the aggregate supply. So both these options are ignorable. Third one, demand pull inflation is caused by increase in wage rates, while cost push inflation is caused by excessive expansion in money supply. See, the opposite could be true, but this given one is totally false. මොකද wage rates කතන්දර අදාළ වෙන්නේ supply side එකට. නැත්නම් demand side එකට නෙමෙයි. Fourth one, demand pull inflation is driven by increase in aggregate demand. Yes, true. While cost push inflation is driven by increase in cost of production. 100% true. So the answer for this question 27 is the fourth one. But look at the last one as well. Demand pull inflation results in higher employment, while cost push inflation results in lower employment. එහෙම employment එකේ අදාළත්වයක් demand pull cost push එකට ඇත්තටම එහෙම එකක් නැහැ. සහ එකම දේ, when the demand pull inflation happens, the economy has already utilized all the resources under full employment. Right? එතකොට ඒක higher වෙන්නේ නැහැ aggregate demand එක තව වැඩි වුණා කියලා. එහෙම කතන්දරයක් වෙන්නේ නැහැ. Right. So answer for this question 27 is the fourth one. Now look at this question 28. High powered money includes. So if you simply remember the components of high powered money, you can easily pick the correct answer for this question. So let me show you all the four components in high powered money. Look at this note now. Here we get the topic high powered money, if not monetary base or reserve money. Then we get components of high powered money. And how many components are there? There are four components. The first one, currency held by public, currency held by commercial banks. Third one, deposits held by commercial banks in the central bank. And the last one, deposits held by government institutions in the central bank. So what happens when you get the totality of this second and third one? You can recognize this to be the reserves of commercial banks, right? Commercial banks. So simply, the high-powered money includes the first one, currency held by the general public, second one, reserves of commercial banks, and the third one, deposits held by government institutions in the central bank. අපි ඒ විතර ගත්තොත් තුනයි, ඒක වෙනම ගත්තොත්, so we have four components. Right, now if you remember this simple thing, you can find the answer easily for this question 28. Look at this one. High powered money includes time deposits held by the public at commercial banks. Totally wrong, ignorable. Savings deposits held by, see, totally wrong. Currency held by the general public, yes, true. And reserves of commercial banks, that's true, but one is still missing. And what's this missing one? The missing one is this last one, deposits held by government institutions in central bank. But no problem. The reason we discussed in the theory classes that this value is insignificant, right? This value is insignificant, hence it is ignorable, right? So that the answer for this question 28 is the third one, right? Loans issued by the commercial bank, that's wrong. Foreign assets, no, that is not a component of high-powered money, right? Look at this question 29 now. Select the statement best explains the relationship between interest rate and the speculative demand for money. So if you remember the diagram, so how do we construct this one? We take interest rate, right? We take interest rate to the y-axis, and then we take speculative motive money demand to the x-axis. And what's the shape of the curve? The curve takes this shape. And what does that mean? It means if interest rate is a higher value, right? If interest rate is a higher value, the speculative money demand will be lower. And if interest rate is a lower value, speculative money demand will be higher. If not simply, there is a negative relationship between the interest rate and the speculative motive money demand. So if you know this simple theory, you can pick the answer. First one, the speculative money demand is independent of interest rate. No, that's totally wrong, because if it is independent, we can't draw this curve this way. Second one, speculative demand for money is directly proportional to interest rate, not directly proportional to interest rate. Because if it is directly proportional to the interest rate, when interest rate increases, even the speculative motive money demand increases, which is wrong. Third one, speculative demand for money increases as interest rates rise. No, the opposite is true, not this given one, because there is a negative relationship between these two. Fourth one says speculative demand for money decreases as interest rates rise. 100% true, because this statement presents the negative relationship that exists between interest rate and speculative motive money demand. So answer for this question 29 is a fourth one. Look at this question 30 now. The new Central Bank Act of 2023 has debarred the Central Bank of Sri Lanka from. Okay, so what's the meaning of this term debarred? Debarred means has prohibited. So that's the simplest meaning. The new Central Bank Act of 2023 has prohibited the Central Bank of Sri Lanka from which one of the following? So this is a fact. So this new Central Bank Act of 2023 has prohibited the central bank offering loans, credit directly or indirectly to the government. And hence, answer for this question 30 is a second one. Since this is a fact, no point of going through the other options. Right, look at this question 31. In the context of public goods, non-rivalrous consumption means, see, when it comes to public goods, yes, we see there are two different qualities. So what are the two qualities we see? On one side, we say they are non-rival, and on the other side, we say they are non-excludable. So here, this question is from non-rivalrous of public goods. So what's the meaning of the public goods being non-rival? Non-rival means if one person consumes the public goods, that doesn't reduce the availability of the product or the good to the others. So that's the meaning of this term, non-rival. Okay, we'll read the given options. The good can be consumed by one individual without reducing the amount available for others. 100% true. And this is not the first time that we get this kind of a question in the exam. In almost all the papers that we have discussed, we get one question from public goods. ගොඩක් වෙලාවට ඒ question එක ඒකේ තියෙන qualities දෙකට related. ගොඩක් වෙලාවට කියලානේ 99.9% of the time. Right. Elisa, yeah, I think there's no need to discuss the other options because this is very straightforward, simple question. Right. Look at this question 32 now. Main feature of regressive tax can be stated as. Okay. So what's the main quality of regressive tax? This is the main quality. Even in the definition, we say if it's a regressive tax, there's a negative relationship between these two variables. So what are the two variables? Tax base. The other one is tax rate. Now, for example, if you think income to be the tax base, right? There's a negative relationship between income and the tax rate. So what does that mean? If your income is high, tax rate will be low. And on the other side, if your income is low, tax rate will be high. ඒක මම තව ටිකක් පැහැදිලි විදිහට කිව්වොත්, from rich, we charge a lower tax percentage. It's about the tax rate, right? Tax percentage. And from the poor, we charge a higher tax percentage. ඔක තමයි අදහස. Not the tax amount, but the tax rate, if not the percentage of tax. Right, now we'll read the given options. First one says, low income earners pay higher proportion of their income in tax than high income earners. And that's what I explained here. Lower income earners, poor people, pay a higher proportion of tax than high income earners. So this itself is the answer. Right. That is also very easy, right? Look at this question 33 now. What's the most accurate statement about the impact of transfer payments on fiscal policy? So this is not that easy. So we will discuss this in detail. So look at this. Now this is from transfer payments and the effect of transfer payments on the fiscal policy. So if I ask this question, what's fiscal policy? Fiscal policy is the policy related to, let's say, government revenue, government expenditure, and public debt. Now, this question is from transfer payments. And where do we get transfer payments? Inside which one of these components? We get transfer payments inside government expenditure. And according to this economic classification, you just tell me inside the government expenditure, what are the main components we receive? We get three main components. And what are these three components? The first one is government's current expenditure. The other one is government's capital expenditure. And the last one is net lending. So these are the three components we find inside government expenditure. And again, if you zoom this in, current expenditure, inside current expenditure, you will again find three components. And what are the three components? The first one is expenditure on goods and services. And this is what we recognize as this government purchase when calculating aggregate demand. So aggregate demand consists of C plus I plus G plus NX. And what is G? In simple terms, we recognize that to be the government purchases. And inside that, what do we really get? Expenditure on goods and services incurred by the government. And that is a part of government's current expenditure. Just one component inside government's current expenditure. And what's the second one? Second one is interest payments. And the third component is transfers and subsidies. Transfers and subsidies. See, this is where we get TR, transfers. And this is the part related to the question. Because this question is from transfers. Right. See, this is all we know with regard to transfers and its relation to fiscal policy. Right. Now, if you have this knowledge, I hope that you can figure out the correct answer. So we'll read all the given options. First one says, transfer payments directly affect aggregate demand. See, we didn't discuss this because I just showed you the relationship between the fiscal policy and the transfers, but I didn't tell you the exact impact on transfers to the aggregate demand. So let me explain that as well. So as I mentioned earlier, aggregate demand consists of C plus I plus G plus NX. See, if you look at this equation, G is one of the main components inside the aggregate demand. So if G changes, if government purchases changes, that will create a direct impact on aggregate demand. But TR, transfers, is not visible inside this equation, but it is there inside the equation, but it's not visible. Where is it? Exactly. If you try to find PR inside this equation, it's hidden inside C. Why do I say so? Because if you remember, consumption is equal to A plus B into YD. So this is C plus, now you can write I plus G plus NX. තාමත් ඔයා TR දැක්කේ නෑනේ. මොකද ඒක තවත් ඇතුලේ හැංගිලා තියෙන්නේ. So where is it? Now you can write aggregate demand equals A plus B into inside YD disposable income. What do we find? We get the income. From the income we deduct the taxes and then we add the transfers. ඊට පස්සේ we get YD. එතකොට this whole thing represents C. or කලින් වගේම add කළොත් I, G and NX, you get the aggregate demand. So what's this difference between direct impact and indirect impact? Now the first option talks about the direct impact of transfer payments. So let's see whether this is true. Right, see that now. Imagine that government purchases change. When government purchases change, yes, it creates a direct impact on aggregate demand, because that is one of the main components. But just imagine that transfers change. Transfers change unama, right? Initially, what gets changed? When transfers change, initially disposable income changes. And then that disposable income get multiplied by the marginal propensity to consumption. එහෙමත් වෙනස් වෙලා තමයි C වෙනස් වෙන්නේ, and then only AD changes. So there's no direct impact from transfers on aggregate demand. So if you understand this simple thing, right, you can figure out that this statement, first statement, has to be false, because it tells us transfer payments directly affect aggregate demand, which is wrong. Second one, transfer payments do not affect the budget deficit. එහෙම කියන්නත් බෑනේ. මොකද there is this impact on the transfer payments to the budget deficit. මොකද හේතුව ඒක ඇවිල්ලා that is a part of government expenditure. See, government expenditure get divided mainly into three. ඒකේ තියෙන current expenditure ඇතුලේ we get transfers. එතකොට this is a part of the government expenditure and hence it creates an impact on the budget deficit. And the other part says as they are not part of the government, which is totally wrong. Third one, government transfers increase government spending. Yes, true. When transfers get increased, even the government spending get increased because it is a part of the government spending without directly contributing to the production of goods and services. See, there's no direct impact on the production of goods and services because the expenditure on goods and services is separated, that is independent from the transfers and subsidies. Clear? So when this thing get increased, the government expenditure get increased. That's true, but it won't create any direct impact on the production of goods and services because this expense is not related to the production of goods and services. That's why. Right. Then we can understand this has to be the correct answer. Fourth one, transfer payments encourage economic growth by stimulating investment. Again, there's no connection between transfer payments and investment. See, transfer payments is hidden inside the disposable income and investment is a separate component in the aggregate demand equation. Right, last one, transfer payments can influence aggregate demand. Yes, true. By reducing, see this part is true, by reducing the disposable income of household. See, I showed you the equation of calculating this disposable income of household. See, YD, how do we calculate this YD? If I show you that separately, YD is equal to income minus taxes plus transfers. See, that's a positive value in the calculation of disposable income. So when transfer get increased, what happens to the disposable income? Even that get increased. හැබැයි question එකේ කියන්නේ වෙන එකක්. මේ statement එක අපිට දීලා තියෙන්නේ transfer payments can influence aggregate demand. Yes, true, that will have an indirect influence. But the second part, reducing the disposable income of households. No, it increases the disposable income of households. So the second part is wrong. Now look at this question 34. It says the main contributors to significant rise in tax revenue in Sri Lanka after the year 2022 were. See that now main contributors කියලා කිව්වට පස්සේ ඔයාට එක නිකන් general knowledge. ඔයාට තේරෙනවා after 2022 personal income taxes were really high. එතකොට that has to be one of the main reasons. ඊළඟ part එක තමයි after 2022 something special happens. මොකද්ද? ඔයා යන restaurants වලත් ඔයා bill එක හොඳට check කළා නම් කලින් value added tax කියලා තිබුණ නැති part එකක් තිබුණ නැති bill එකේ තිබුණ නැති එකක් පස්සේ bill එකට එන්න ගත්තා after 2022. ඒ කියන්නේ the government increased the income taxes and they increase the value added tax and they focus much more on value added tax. ඊට පස්සේ අනිත් එක තමයි excise duties, import duties. This is the answer, and this answer represents main contributions to the significant rise in tax revenue in Sri Lanka. Right, look at this question 35. In the context of international monetary funds debt restructuring process, what's meant by debt sustainability analysis? So the meaning of this term, debt sustainability analysis. So this is simply an analysis done just to evaluate the total amount of debt that a country can bear up without defaulting the loans. And an answer has to be this first one. It is an analysis done to determine the amount of debt a country can sustain, bear up without defaulting. So answer for this question 35 is the first one. Right, look at this question 36. Country has comparative advantage in producing a good if. See, very simple. Comparative advantage is always about the lowest opportunity cost. So if a country has the comparative advantage in producing a specific good, it simply indicates that this given country has the lowest opportunity cost in producing that good. And so answer is obvious. First one, it has the lowest opportunity cost in producing that good. එතන මේ වගේ දේවල් අර අනිත් උත්තර කතා කරන එක කිසිම තේරුමක් නැහැ. මාරම ලේසි ප්‍රශ්න. Right, look at this question 37 now. Consider a domestic industry where the value of imported inputs is rupees 5,000. The value of final product is 10,000. See, they are importing the inputs worth 5,000 and then they do the production process and they sell it for rupees 10,000 in the market. If the tariff on the final good is 25% and the tariff on the imported inputs is 20%, what's the rate of effective protection? See, the effective rate of protection, how do we calculate this? Simply, that is V1 minus V0 over V0 multiplied by 100. And what's V1 in this equation? V1 is the domestic value addition under tariff system. So how do we find this domestic value addition? Gross value added is equal to gross value of output minus intermediary consumption. So under the tariff system, gross value of output get increased by 25%. So the normal price without tariff, the price is 10,000. If it get increased by 25%, the gross value of output, the new price has to be 12,500. And intermediary consumption, again, this is the intermediary consumption under the tariff system. So without tariff, they can import this thing for rupees 5,000. But for inputs, when the government imposes a new tariff of 20%, right, the price of inputs get increased by 20%. If you calculate 20% on 5,000, that will be just 1,000. So 5,000 plus 1,000 will be 6,000. So the domestic value addition under tariff system is 6,500. And also we need V naught. And what's this V naught? That's the value addition, domestic value addition under free trade system. So under free trade without any tariff, the gross value of output is 10,000 and the intermediary consumption is just 5,000. So that the value addition is 5,000. Now you just need to put these values into this equation. So V1 is 6,500 minus 5,000 over 5,000 multiplied by 100. So this will give us the value 1,500 over 5,000 into 100. So how much we get? 15 divided by 50 into 100 is 30%. Right? That is 30%. So the answer for this question 37 is the fourth one. Right. Now we'll move to question 38. Right. What is the newest bilateral free trade agreement signed by Sri Lanka? So the newest one. We don't usually discuss these questions. So we'll skip this one because these things change year to year. Right. Look at this question 39. Table below shows some data pertaining to the balance of payments of a hypothetical economy. So we get all the data and what do they ask? What's the balance of the current account of the balance of payments? See, this is very easy again. So this current account, right? Current account consists of 4 sub-accounts. So what are the 4 sub-accounts? Trade account, and then we have services account. Then we get the primary income account, and also we have secondary income account. So if you get the total of all these 4, you get the total of the current account. So trade balance is given to us as 120.1. Service balance is 29.3. Primary income balance is minus 25.8. And then secondary income account balance is 11.5. And we just need to add all these values. So what are the values? 120.1 plus 29.3 minus 25.8 plus 11.5. Answer is 135.1. So answer is the second one. But there's another interesting way to find this. I will just show you this one because this will be helpful for your A-level exam. Right. So we know that there is another equation. What is this equation? We have used this in our previous papers as well. So we say current account balance plus capital account balance, right? Capital account balance plus financial account balance plus we write balance in errors and omissions account must be equal to 0. And if you closely observe the given values, we get the capital account balance as minus 35.1. See, you write capital account balance, that's minus 35.1 plus financial account balance is also a minus value, that's minus 112.6. So let me write, this is again minus 112.6 plus balance in the errors and omissions account, that is 12.6. So you write, that's a plus value, just write 12.6 must be equal to 0. And 1 is still unknown. What is that unknown value? That is the current account balance. So you solve this equation and you find the value of x. That x will again be 135.1. So same as the previous answer you received. So these methods, right? These are two different methods, and you can apply any and you can find the exact same answer. Right, now look at this question 40. Which of the following scenarios will satisfy Marshall-Lerner condition? So what is this Marshall-Lerner conditions? We have discussed this many times in the paper discussions. So it simply says that this depreciation of the domestic currency to be beneficial for that given country, right? Price elasticity of demand for exports plus price elasticity of demand for imports has to be greater than 1. Right? So this is the Marshall-Lerner condition. Right. Look at the first one. Price elasticity of demand for exports 0.5. ඔයාලට පේනවා හැමතැනම එකම දේ තමයි ලියලා තියෙන්නේ. ඊට පස්සේ price elasticity of demand for imports that's 0.3. ඒ ටිකෙත් හැමතැනම එකම දේ ලියලා තියෙන්නේ. ඔයාලට තියෙන්නේ ලොකු දෙයක් නෙමෙයි. ඔයාලට තියෙන්නේ values ටික බලලා එකට වඩා වැඩි value එක තියෙන answer එක select කරන එක. එකට වඩා වැඩි දෙක තුනක් තිබුණා. ඒකෙන් වැඩිම එක ගන්න. Right. And this is just 0.8, here 0.6, and that is 1.4. So this is the answer. අනිත්‍ය වැඩ කරලා බැලුවොත් 0.6, 0.9, 1.0 එකට වඩා වැඩි නෑ. So answer is the second one. Right. Now look at this question 41. It says if a country's effective real exchange rate depreciates. Okay. Before we discuss the given options, we will see how to calculate this effective real exchange rate. So let me write real effective exchange rate is equal to nominal effective exchange rate multiplied by, this is multiplied by what? Domestic consumer price index, and it is divided by foreign consumer price index. And if effective real exchange rate depreciates, what could happen? This value you receive for real effective exchange rate has reduced. And what could have happened? එක්ක මෙයා අඩු වෙන්න ඕන. මොකද ඒගොල්ලෝ ඉන්නේ numerator එකේ. එහෙම නැත්නම් මෙතන numerator එකේ තියෙන value එක අඩු වෙන්න ඕනේ. එහෙම නැත්නම් මේ value එක වැඩි වෙන්න ඕනේ. Simple as that. දැන් අපි කියවලා බලන්න ඕනේ ඔය කියන කතන්දර මේ මොන option එකේද දීලා තියෙන්නේ කියලා. Look at this one. Countries' exports have become cheaper relative to foreign goods. Can that be the answer? Let's say Sri Lankan exports become cheaper relative to foreign goods. Why is that? Because as we thought earlier, when the domestic consumer price index is lower, domestic goods become cheaper to the foreigners, because in those countries, they have a higher inflation, and due to this high inflation, goods are expensive compared to Sri Lanka. So this is the answer for this question 41. But we will go through the other options as well. Second one says inflation rate in the country, again, domestic inflation rate has significantly increased. No, domestic inflation, nathang domestic consumer price index should decrease for this real effective exchange rate to decrease. So this is not the answer. Third one, country's nominal exchange rate has increased. Ne, nominal exchange rate, nominal effective exchange rate. So that has to be anyway decreased, not that it increases. Fourth one says the country's currency has appreciated against a basket of other currencies. See that now it says currency has appreciated, but here it says the real exchange rate has depreciated. So this really should be a depreciation of the currency, not an appreciation. So that's wrong. Last one, rise in domestic prices while nominal exchange rate remains constant. See that now, rise in domestic prices, the CPI must increase. No, the domestic CPI should decrease. So this is also wrong. Right, now look at this question 42. What is a central bank swap agreement? Okay, so this is the swap agreement of the central bank. Right, now just imagine that we have two countries, and country A and then country B. So in country A, we have a central bank, and in country B, we have another central bank. So a swap agreement means these two central banks of the two countries get into an agreement to exchange their currencies at a specific rate. Now, let's say, for example, $1 equals rupees 200. Right. Now, if this is the Central Bank of Sri Lanka, so Central Bank of Sri Lanka receives, let's say, $100 initially. And why is it obtained by the Central Bank of Sri Lanka? There could be several reasons, and among them, one major reason is to stabilize the foreign exchange rate in Sri Lanka, Sri Lankan rupees with other currencies, right? So once this stabilization happens, after some time, this Sri Lankan central bank pays back the obtained dollars at the same rate that it obtained, right? So the rate is once again $1 equals rupees 200. So they pay back the previously obtained dollar amount with an interest, right? With an interest, even the interest is calculated at the same rate. So this is the swap agreement of the central bank, and which option presents this idea? First one says an agreement between central banks to exchange goods and services. No, this is more towards, this is not a swap agreement, this is more towards credit line. Then swap agreement කියන එකටම අපිට ඕනේ නම් කියන්න පුළුවන් swap line කියලා. එතකොට this is more towards credit line, it is not related to swap arrangement or swap line. Second one, a bilateral agreement between central banks to exchange currencies to stabilize exchange rate or maybe to provide liquidity. Yes, that is true, and that's why I told you there could be several reasons. Okay, so this one presents the idea that we discussed. So this is the answer for this question number 42. Right, look at this question 43 now. Which factor is most likely to cause an improvement in country's human development index despite a stagnation in economic growth? All right. So before we select the answer for this one, let me show you the criteria that we use when calculating this human development index. Now check this. These are the criteria that we consider when constructing this human development index. We get the three criteria and the indicators on this side. So for this human development index to increase, even if there's no economic growth, what could be the reasons? Maybe increase in life expectancy, or maybe an increase in expected years of schooling or mean years of schooling. So if one of these get increased, clear, HDI value will increase even if there's no growth in the economy. Right. Now with this idea, come back to the question. Right. Again, which factor is most likely to cause an improvement in country's human development index despite stagnation in economic growth? So what's the answer then? Answer is very much clear. Increased life expectancy. The very first point that we checked there. See, increase in life expectancy at birth. So that's the answer there. Okay, now we will move to the next question. That is question 44. The middle income trap refers to a situation where the middle income trap. See that now countries are categorized based on the income as low income countries, lower middle income, upper middle income, and then higher income countries. And the middle income trap refers to which of the following? It refers to this. Once the country get into the middle income category, right, they struggle a lot, but still the country fails to transform into a high income country. So that we recognize as the middle income trap. This is what I believe. Even if you look at the 5 provided answers without any knowledge with regard to this middle income trap, you will still be able to figure out the answer using your common sense. All right, now let's move to question 45 now. Right. So in question 45, we get a table, and this table shows some selected socio-economic data of a country for 2 time periods. Okay, we get the year 2010 and 2020, nominal GDP, literacy, mortality rate, general price level. So let's see what has happened between these 2 years. nominal GDP has increased. Literacy has also increased. Mortality rate has decreased, and that's something really good. General price level has again increased. See, okay, so these are the changes that have happened. And then, which of the following statement on the socio-economic status of this economy for the period 2010 to 20 is consistent with the data presented in the table? Okay, so if you look at all these five options, in all the five options, they just talk about the real GDP, right? So how do we find this real GDP? That is, you take nominal GDP, divide this by the GDP deflator, and we multiply that by 100. So if you do this for both years given, this will be the outcome. In year 2010, the nominal GDP is 75 and the GDP deflate, if not the price level, general price level is 125 multiplied by 100. So 75 over 125 into 100 gives us 60%. And then in 2020, if you calculate this same thing, nominal GDP is 120 and the general price level GDP deflator is 150. So 120 over 150 into 100 is just 80%. Then what has happened to the real GDP? That has increased. So either this or the second one has to be the answer. We can cut all the other options. And look at the next part. In the first option, it says improved living standard. And in the second option, it says decline in living standards. ඉතින් ලොකු දෙයක් නෑ. අපි කලින් මේකේ answer කතා කළා. Literacy level has increased and that's really good. Mortality rate has decreased and that is also really good. So what has happened to the overall standard of living? That has increased. And that's why we choose this first one to be the answer. So simple. Right. Now look at this question 46. Old age dependency ratio specifically refers to the ratio of, okay, so how do we find this old age dependency ratio? Simply, that is the old population, simply, right? All population over working age population, right? So all population, if not elderly population, how do we recognize that? That is a population of 60 years or above divided by working age population, that is a population between 15 to 59 years. So we take these two and we multiply this by 100. So which option expresses this equation? See, individuals aged 60 and above to the population aged 15 to 59. So third one is the answer. Right, 47. Which of the following countries is most likely to have high Gini coefficient? Okay, having high Gini coefficient means having a higher disparity in income distribution. Right, so keeping that in mind, we'll read all these given options. A country with universal free healthcare and education. See, universal free healthcare and education. A country like Sri Lanka. See, if they have provided all the education and the healthcare facilities for free, the income disparity must be somewhat lower. Then the Gini coefficient will be a lower value. So this is not the answer there. A country experiencing positive economic growth with low level of unemployment. See, if there's a positive economic growth and lower level of unemployment, which means employment is really high, then again, the disparity in income distribution has to be lower so that the Gini coefficient will be lower. So this is again not the answer. A country with progressive tax system. See, a progressive tax system always reduces the inequality in income distribution. And extensive redistribution policies. Very good. Perfect. So as a result, what will happen to the inequality? Inequality decreases, Gini coefficient drops. So again, this is not the answer. A country with bottom 10% of the income earners hold 90% of the total income. Almost perfect. Why? 10% of the population earns 9% of the total income. 1% of podi aduwak thiyene, that is ignorable. So even this country has a higher equality in income distribution. So Gini coefficient will be lower, and this is not the answer there. Fifth one, country with a large informal sector. Informal කියලා කියන්නෙම කිසිම supervision එකක් නැහැ, regulate වෙන්නේ නැහැ, කිසිම transaction එකක් record වෙන්නේ නැහැ. ඒ නිසාම the country has a lower tax, right? Tax is lower. Tax income is lower. If the tax income is lower, නම් they can't engage in redistribution activities. එතකොට tax income is lower, even the redistribution is lower, and to worsen that, it says minimum social safety nets. The obviously tax income එක lower නම් social safety nets must be again very minimum. එහෙනම් this is the country with a higher disparity or higher inequality in income, and this country will have a higher Gini coefficient. So this is the answer for this question 47. Right, now look at this question 48. What is the significance of Colombo Port City project for Sri Lankan economy? අතර මේ වගේ answers පහක් තියෙනවා නම් ඒවා නිකන් common sense වෙනවා. See, the first one says it is a major initiative to attract foreign investment and trade. 100% true. But just compare this with the other options. It aims to develop a shipyard for container handling. එහෙනම් ඒගොල්ලන්ට තිබුණා තව ටිකක් ලොකු port එකක් හදන්න. Port city එකක් හදන්න. Just a port. So this is not the answer then. Simple. It focuses on increasing domestic production. Yes, it focuses on increasing domestic production, but through attracting foreign investments and trade. එතකොට ඒක වුණාට පස්සේ this will automatically happen. එතකොට if you compare the first one with the third one, first one is the most significant. And as a result of achieving the first one, the third one will happen automatically. Right. Fourth one, it focuses exclusively on creating jobs in Colombo city. ඉතින් ඒ වගේ options answers නෙමෙයි කියන එක obviously තේරෙනවනේ. Fifth, it prioritizes development in Sri Lanka's tourism sector over other industries. No, that has nothing to do with the tourism. Right. Look at this question 49 now. A major trigger for Sri Lanka's economic crisis in the year 2022 was. So what was the major trigger? The high burden of public debt. So answer has to be then significant decline in no, excessive appreciation no, sharp increase in global no, decrease in production chemical no, unsustainable accumulation of foreign debt. Loans gannawa unsustainable. And that leads to the crisis in year 2022. Right. 50th, IMF extended fund facility to Sri Lanka in the year 2023 is primarily aimed to. Okay. So what's the aim of this IMF extended fund facility? This is again a fact, but if you just go through the 5 options, you can understand the correct answer simply. First one, reducing the country's inflation rate to below 5%. No, that inflation rate and the IMF extend fund facility, there's no relationship. Second one, restoring macroeconomic stability and debt sustainability, because this is what we were lacking of. We didn't have macroeconomic stability and debt sustainability, and that's why we went to IMF. So this has to be the answer there. Third one, transforming Sri Lanka towards high income country status in 2048. මේවා විල politicians ලගේ කතන්දර නැතුව IMF එක කතන්දර නෙමෙයි. Fourth one, supporting a fixed exchange rate regime. Then IMF වගේ international organizations, they support the international trade. If they support international trade and the development of the economy, they will never support a fixed exchange rate regime. ඒගොල්ලෝ හැමතිස්සෙම encourage කරන්නේ floating. Right. Fifth one, privatization of state-owned enterprises. This is not the primary aim. The primary aim is the second one. So if you compare the two, second is the best option from the 5 options provided.